Will interest rates start heading down? If you haven't heard, Silicon Valley Bank closed its doors Friday, March 10th, due to customers withdrawing their deposits beyond what it could pay using cash reserves. And so to help meet its obligations, the bank decided to sell $21 billion of its securities portfolio at a loss of $1.8 billion. Within the same week, two more banks collapsed, Signature Bank and Silvergate Bank. This has caused a lot of uncertainty in the market. So what does this mean for the real estate market? In this video, I will be discussing some of the stats regarding the bank collapse, an outlook on rates, and if you're a buyer, jumping in now before rates decrease, because supply is still low, demand is still high, and rates will only amplify this. Silicon Valley Bank was the second largest bank failure in U.S. history and the largest since the 2008 financial crisis. Signature Bank and Silvergate Capital, both big lenders in the cryptocurrency space, also shut their doors. This has caused a bit of panic in the market, and to help avoid mass panic, the Federal Reserve Deposit Insurance Corporation and Treasury Department created an emergency program to backstop all deposits using the Federal Emergency Lending Authority. That granted depositors full access to their funds, and the agencies vowed to make all the depositors whole. This uncertainty about the borrowed exposure has fueled the rally in the bond market as investors flee to safety, which has already begun to lower yields, and the mortgage rates have started to follow suit. After above 7% recent weeks, still labor market data suggests the economy is still running hotter than the Feds would like. And the upcoming inflation report will play a large role in whatever action they decide to take later this month. The average rate on the popular 30-year fixed mortgage dropped to 6.57 on Monday, March 13th, according to Mortgage News Daily. That's down from a rate of 6.76% on Friday and a recent high of 7.05% last Wednesday. So for a buyer looking at a $500,000 home with a 20% down on a 30-year fixed mortgage, the monthly payment this week is $128 less than was just last week. This is still, however, higher than it was in January. So what does this mean for the spring housing market? In October, rates were over 7%, and that started the real slowdown in home sales. But rates then started falling in December and were near 6% by the end of January. That caused a surprising 8% monthly jump in pending home sales, which the National Association of Realtors measures signed contracts on existing homes. Sales of newly built homes, which the Census Bureau measures by signed contracts also, surged far higher than expected. So overall, interest rates declining are a big if, but we are starting to see them currently coming down. Inflation still plays a big role with rates. If you're in the market to buy, I would highly suggest jumping into the game now. I hope you enjoyed this video. For a more local market snapshot, you won't want to miss my next video, February's market update. In this video, I will quickly discuss things we are seeing hyper-local, such as days on market, inventory, medium home pricing. If you have any questions at all about anything related to real estate here on the Central Coast, please don't hesitate to reach out.